Signal to start. Good evening and good afternoon, everyone. I hope you all had a good lunch. I'm joined here by my good friends Izzat and Ronnie. All three of us are licensed robo-advisors in Malaysia. Guys, why don't we give the crowd some introductions on ourselves? Izzat, why don't you kick off?
Okay, sure. Hi everyone. Assalamualaikum and good afternoon. Thanks for tuning in. My name is Izzat. I'm the country exec director for Wahid Invest Malaysia. So Wahid Invest Malaysia is the first Islamic DIM digital investment manager licensed by the SC last year, and we officially launched in October last year. So we are closing in on our first year anniversary. So we are a full Sharia compliant robo advisor. And started in the US in 2016 with license from the SEC, and then in the UK in 2018, also licensed by the FCA there, and then finally licensed by the SC, which we are very appreciative of the SC for coming up with the guidelines for digital investment management. Yeah.
Ronnie?
Yeah, well, very good afternoon to everybody. Have a good, just a very quick rundown. I'm Ronnie. I'm the CEO of GexMD. So basically, GexMD obtained its license back into last year, June 2019. So GexMD was formed through a joint venture between Silverlake Group and Money Design Japan. Silverlake Group is one of the leading digital fintech player in Asia, and Money Design is the pioneer the robo advisory business back in Japan in 2016. Yeah, so there are a bunch of practitioner, fund managers, portfolio managers, ex Nomura, ex BlackRock people. Yeah, so I think that we're here as a part of a digital investment management to provide the.
Great. Thanks, Ronnie. Thanks, Izzat. My name is Ken. I'm the Stashaway Country Manager. We started in Singapore and then moved to Malaysia about 2.5 years ago. We were the first robo-advisor to be licensed in Malaysia. And I'm also very glad to be on this panel because, as you can see, all of us have very, very experienced backgrounds. And we want to share more with you today on why digital investment managers, or commonly referred to as robo-advisors, are a very good destination for your investment. So what we'll do in this fireside chat is we'll be basically three old men sitting together asking ourselves some questions. So we have a few questions to go through, and then at the end we'll talk about the pop quiz, and then we'll address some of your questions as well on Slido. So yeah, we're just gonna go around ourselves and ask a few questions. So Ronnie, why don't you get us started with the first question?
Yeah. Okay. I think that first of all, thank you very much for SC to organize it. Ken, I think they've done a very good, gather us all together to give a briefing on DIM. I think let's start off with the very basic understanding of a DIM to remove certain perception and whatnot. Yeah. So basically, digital investment management is really a investment service that is highly digitized and is basically driven by a systematic algorithm, yeah, supported by very proven investment and portfolio methodology, yeah, and so what it does is really personalizing a portfolio. It depends on each DIM how they behave, yeah, and behind the scene to give you an overview, a very quick overview, it is really a lot of other things that is happening behind. Yeah, one is structuring a portfolio that is really trying to customize one that is fitting each individual persona, risk appetite. And behind the scene, it does trading, rebalancing, the optimization, the whole loads of things. Yeah. So basically, it's like a wealth manager, a traditional wealth manager, but a lot of things has been digitized. Yeah.
Izzat, what's your take?
Sorry.
Yeah, I think Ronnie has explained it briefly, quite in depth as well. So for us, to put it simply, DIM is just automated investment manager or investment advisor. So instead of previously investors going to the counter or meeting consultants, they can now access investment solutions via what we have now is applications in the smartphones. And in terms of in Malaysia, because we have a regulation and guidelines by the SC, the technology behind each of the DIMs have to go through the robust, cybersecurity and also technology audit by the SC. So in that sense, we have been the robo advisors have been vetted, not just by the regulators, but also we would have certain strict requirements on how we store personal identifications, and also the bank security level that we have should be robustly tested and so on. So again, like Ronnie said, it's similar to what the traditional investment manager is, but it's only in the digital form.
Yeah, what I will add to that is when you look at your personal choices on how you invest your money, you really have two main choices, right? One is to invest yourself, like trading stocks or forex, and another one is to outsource it and let an expert manage it for you. And when you outsource your money to an expert, it's like letting a pilot fly a plane for you, which is obviously much more convenient. And that's where DIMs like Wahid and Stashaway and MyTO comes in, because what we do is we understand your investment preferences, give you a portfolio that suits your needs, and give you exposure to gain steady long-term returns. We will talk later on about how we're different to unit trust and all that. So why don't we go to the second question?
Yeah, that's a good segue. So, so the second topic that we'll be sort of talking about is how is DIM different from the traditional fund management services that we have here in Malaysia. So of course, how we are different is first and foremost is the fees. Like all DIMs here have one standard, we call it RAP or annual fee. So that already covers all the trading expenses, all the additional value add from the DIM services like rebalancing, even the portfolio recommendation services. And typically, what we have here in Malaysia is less than 1% on an annual basis. And this we compare with the traditional fund management. They usually have multiple fees. Not only the management fees, they also have sales charges, up to 5% in some cases. Some have redemption charges and so on. So that is one of the differences. And the second one is the minimum initial investment. So typically in Malaysia as well, so the DIMs here, the minimum initial investment is usually 100 ringgit or below. And if you compare that to how you want to invest in traditional fund management, some of them do have until 100 ringgit minimum, but most of the time they would require a minimum investment of about 500 or 1,000 ringgit. So that already sets a barrier of entry to some of our investors here. And next we talk about the investment style. So typically DIMs invest in passive instruments. So what we mean by passive is we invest in products that doesn't necessarily want to outperform the general market, but it follows the trend of the basically the popular benchmarks that we have globally. So the passive investment is for you to be able to track basically the performance of global indices. And again, when we compare this to traditional fund management, most of the time their mandate is to outperform their particular benchmark. And some of them are able to do so. But again, there are studies out there that quantitatively measure and found out that on average, a lot of these active fund managers do not outperform their benchmark even. And this is something that we offer to our investors is the ability to more of the time is to basically just ride the growth of the general stock market lah, whether be it the Malaysian stock market or US stock market and so on. Yeah, and I think the next one is in terms of what the user or the investor needs in terms of financial knowledge. So usually for you to be able to be onboarded and to use DIM platforms, you wouldn't be required to have a lot of financial knowledge. So you can just, a lot of the literature can be gotten by in the app itself. Whereas if you want to invest in the more active funds, you would need sort of a moderate to high financial literacy, because you would need to understand the risks involved in investing in a particular mandate and so on. Yeah, so I think those are the 4 points that I would like to touch. I don't know if any of you have any other points to add.
Ronnie, anything to add or to go deeper into some of the points Izzat just mentioned?
Yeah, I think that one of the key points that Izzat has mentioned also the difference between passive and active management. Yeah, and basically robo-advisor or DIM like us, the three of us here, yeah, that we really adopt a passive approach. And that's a very, very important point that I want to stress on part of education. Yeah, and during the current MCO and even the current market situation, that one of the key things that we need to really articulate to the investor, it is a DIM or robo-advisor. It is not really an asset class to be traded. It is actually an investment service. So do not treat a DIM, a robo advisor like Mitio, Stashaway, or Wahid like a trading commodity, like you are able to trade like a Bitcoin or a gold, where you want to go in and go out, and and hopefully like a glove stock that moves 30-40%. Yeah, I think that is very important, that we have to let the general investor look at DIM as an investment service. Investment service that really look long term. Okay, there will be market situation because of these uncertainties. There will be time for blips, noises, peaks, ups and downs. But from a robo advisor, okay, I'm sure most of the three of us will agree that we do not try to time the market and try to take advantage of the situation, because the investment strategy that we have sort of formulated for each of our investor are for long term. Okay? So I think that's very important for people. I mean, there are cases. I don't mind people coming into my platform within 2 months, they pull out because of the return. So we have a lot of this education, and at least in Malaysia, three of us are 1 year. Yes, we do have a track record in Japan over more than 4 years, and we do back tested results. So I think that it's important to try to stay with three of us, the platform, on the longer term perspective, so that you can really see the longer benefit. That's my take on the point.
Yeah, I couldn't agree more with both of my esteemed peers over here. What I will add is, at the end of the day, it's about an investment service, and the underlying investment product is very important. So when we come back to the question about how is it really different to the fund management services here in Malaysia, and if we really look at the investment product, besides the active and passive argument that was brought up earlier, I think the actual exposure to different markets is also an important thing to highlight. Through the three of our platforms, you actually get exposure to different geographies, different asset classes, which is key to investing in the long term. If you invest with unit trust players here, they have a wide variety of products, to be sure, but then it's very flavor based. Every month there's something new, and then the agent or whatever will be saying, why don't you go into this, why don't you go into that, right? Whereas for us, we blend everything in for you, and you have different asset classes and you have different geographies to get exposure to, so you can invest in the long term. And then it's how you deploy that investment strategy, right? Ronnie touched on it in the first question, where we talk about a systematic way of investing. A systematic way of investing, not to be confused with like machine learning or newfangled words like AI and all that. Systematic investing is basically all our platforms have certain logic which enable to express our asset allocation, right? How we invest. So it's not like we wake up in the morning and we sakit belakang and then we bad mood and then we trade the market wrongly that day, right? We have a very systematic, long view, strategic view when it comes to investing. So all of us have investment logic, which you can check out on our website. I think that's very important to be consistent, not to be hot and cold. One year you beat the market, one year you don't beat the market. And another thing I will say, which adds some depth to what Izzat mentioned earlier, is the fees. The fees at the end of the day is what really matters to you, right? The investor. But the net return, not the gross return, is the most important. So with the unit trust fund manager normally charging 5% upfront and then 2% management fee, that's 7% going in already. Whereas with us, it's all under 1%. 1% versus 7%, huge difference, especially if you compound, yeah. So I think all of those things make it a very, very attractive proposition for you to at least park some money with DIMs. Let's go to the third question, which goes into the what are the advantages of investing with a DIM? Now that you understand what a DIM is, how we're different to unit trust fund managers, what are the advantages? Ronnie, why don't you start us off?
Yeah, I think the advantages mainly has been really quite well articulated by my fellow peers here. Yeah, and it's really talking about affordability, okay, and affordability, accessibility. Yeah, I think it's really important. And one of the key thing is also there is no human bias, and that's very important in terms of the way of things how we work. There's no emotional attachments to a certain strategy. Yeah, and to also relate it back to the original second question of the traditional fund manager and a DIM. Okay, and each of us have its own space to play. Yeah, the market has different space, have different segment, different preference, customer preference. There's a lot of room for both players, both traditional and digital investment manager to collaborate in many ways. Okay, and one of the key advantage that of us having over is really the accessibility, the way we could sort of reach a wider scope of people. Okay, and if you look at the traditional fund managers or wealth manager, that can only serve a certain set of clienteles. Yeah, not because they're arrogant or not because they are choosing. It's just that because of the market reach. Yeah, whereas in a DIM, we could offer the same thing and to complement them to reach on a larger scope. So the key point of this is really promoting financial inclusiveness. Because the entry investment amount is not very prohibitive, it's very low, okay, for you to try it out. But really to be really have a meaningful investment, don't put $10 lah, yeah, but put in a good meaningful amount, and that's the purpose of the platform like three of us. We allow them to have a very easy entry, and hopefully they gain confidence and have a top up through dollar cost averaging, money savings, and this all can be done by a phone. Yeah, and it's very accessible, and obviously now can be very, very depressing as an individual trying to read the news, what's happening here, what's happening there, in US and even in the local market environment, and try to absorb all this in addition of worrying your day-to-day business. Yeah, so I think that the key thing that the DIM takes a huge portion of that away from a normal day-to-day person. Let us take care of the so-called nitty-gritty investment while they focus on their main the main job. Yeah, so this is the main thing. Yeah, that's what I think. Yeah.
Is that?
Yeah, I think I'd just like to touch on the on the fintech side of it lah, in terms of the advantages. So Ronnie said that let us do the investment management job, or you focus on doing what you do, and certain transactions like topping up and so on, all of our products have eased it by introducing like recurring a feature. So with that, investors can just, as they say, set it and forget it. So uh, uh, for you to exercise dollar cost averaging and so on, it's just as simple as setting up your recurring deposits, and just let it grow organically. You don't have to even manually do it. So again, this is if investors are able to do so, if they have the means to do so. But I mean, going forward, I just foresee that a lot of these fintech features will more or less sit into not just other fintech products, but also the DIM platforms that we have. So yeah, that's something that I look forward to, and hopefully from there, the investors can also benefit as well.
Brilliant. So what I will say is that on top of the convenience and the cost and the intelligent investment that you actually go into, another added benefit is not compromising on seeking good advice or seeking good customer service. I think a lot of people hear the word robo-advisor and think that we don't give good service level. Yeah. So I think if you really want to ask something about your money, you want to be able to speak to someone. You want to be able to talk to someone who knows what's going on. So don't think that you don't have someone at your disposal when it comes to administrating your fund flows, or if you have any questions about anything, you can always reach out, and we will have people on hand to answer. So I think that's also another benefit. You have all this convenience, but at the same time, you're not foregoing a good customer experience. And on the note of innovation that Isa brought up, I think tech players are really sunrise industry, right? We are always going to be innovating, whereas the traditional firms are only starting to digitize. So we will continue to forge ahead and bring you more exciting products. The way you look at innovation also should be paid careful attention to, because it's not just always about a new flavor of product. I think one of the ways we actually innovate is actually how we talk to you. We don't talk to you as if you're a PhD or Nobel Prize winner in economics. We talk to you in very plain and simple terms because we want you to know exactly what's going on with your money. We don't want you to think that, oh, you give your monies to some smart algo and it takes care of the rest. We communicate very, very frankly with you, so you know what's going on. And we also tell you, like, we align our interest to you. So we tell you that it's in your best interest of how to invest your money. We don't just throw a whole bunch of products at you and say, see what sticks. This is hot. This is not, right? So I think innovation comes in many, many forms. And I think we are doing a reasonable job introducing exciting products, exciting ways of getting the most out of our platform, but also making it actually quite easy and quite fun to track your investments as well. So gents, next question.
I think next question is how to invest in DIMs. Anybody want to take it?
Yeah, I'll jump in. Thanks for the question. Investing hasn't been easier. It's so easy these days. At the risk of showing my age, I think last time I have to go in, do thumbprint, sign things, go to the branch, and that was all very inconvenient to me. And the reason why I took on this job was because I actually tried the service myself, and I thought, wow, it's so easy. I can just start investing globally. So with an app and with a web platform, we can already put your money to work. And once you're in the platform as well, there are many exciting features. So you can do dollar cost average, like we mentioned earlier. So you can actually build up your position, not look at trying to time the market. Investing has never been easier. So I think, well, like Ronnie said earlier, just don't procrastinate. Just download the app, try us all out, and start with a meaningful amount, and you'll be on your way.
I think for us, I'll probably just explain just for those for our audience that haven't invested in DIMs yet, just the step by step, just to basically just briefly explain how. So for all of our applications, be it Wahid, Stashway, or my Theo, You can download the application from App Store or Google Play, and once you download it, you can register using a valid email address. So that's important. After you register, I think all of our three products will give you a series of questions to basically determine your risk profiles. Upon the algorithm running and making sense of the input that you've given, it will basically come up with a portfolio recommendation. And this is something that, again, take into account your risk tolerance. And for all of our products, I think we can either choose to use it, or you can, if you want to be more risky or less risky, you can choose other portfolios as well. And then investors will have to go through a series of eKYC, or know your client. So this is where you will have to upload your documents, like your MyCard or your proof of address. And this is for verification purposes. And again, all of the data that investors provide are encrypted. So they are all safe keep, in all of our servers. And after you've registered, gone through eKYC, been approved, then clients can start to invest. Be it you want to do a one-time top-up, or you want to set recurring. And everything can be done through all of our apps. And then after your funds have been received and invested, most of the time when you later open the app, you go to a landing page that basically shows a summary of your investments, shows how much you have gained or lost, and you can decide from there whether you want to top up more or you want to withdraw, and whatever. So all of our apps are user friendly in a sense, to ensure that again, going back to accessibility and affordability, that you can invest as little as 100 or less, for you to again measure the performance of your funds, whether or not it's tracking the underlyings properly or not. And because we are all using exchange traded funds, right? There's a layer of again, there's another transparency there, because if you go on and look at the ETFs, you can actually see what stocks they are investing into, and yeah, all of this details and so on can be obtained from all of our apps. And yeah, I highly encourage those that haven't tried investing in DIMs to do so.
Yeah, basically, I have nothing more to add. I think that Izzat and Ken have well articulated the flow, and most of us are doing basically the same thing in terms of the onboarding process. Right.
Yeah, I think one thing that I would like to add is that when you have set in investing into one portfolio, you can actually change whenever your risk profile has changed. So basically, for Wahid, you can actually retake the questionnaire. So let's say if your income has increased, or certain conditions have changed, you've grown older and so on, you can retake the questionnaire. So and then the portfolio advice given will be different from the one given earlier, because it will bracket you into another risk profile. So again, all of this portfolio advice is you can just basically do it at any time. I'm sure for other apps as well, you can have multiple portfolios and so on. So that's the beauty of DIMs. You can not just invest in one portfolio with a few products, but you can invest in multiple portfolios as well. And having only said the advantages of DIM, I also have to express that it's not a one size fits all solution as well. You have to take into account that in Malaysia we have or other people, we have ASBs, tabung haji, and other investment solutions. So you have to take all of your financial situation into consideration, and hopefully DIM will have a place there as well, as a passive investment instrument for you. Yeah.
So Ronnie, you want to ask the next question?
The next question is,
yeah, so we
The
We
anti.
have to, yeah. So we have to do a bit of a public service
Okay, okay.
announcement.
I think.
So yeah,
Sorry.
yeah. Let's talk about how we can together combat all those scammers.
Yeah, I think there's a lot of concern in terms of cyber attack and anti-scam and all these things. Yeah. The first important advice to the investing public is make sure you invest in a sort of an authorized license. And this is on the web page of Securities Commission. Make sure they are registered and not illegit kind of the scammers. Okay, and most of us, well, the DIM, yeah, okay, when you on board, we keep you informed. There'll be a lot of push messages pushing to you. So and look at those websites, whether they're legit names. And as Ken mentioned, all of us also have a so-called contact center. There are actually human behind it where you can actually call to double check that this is a legit thing, and the important thing is when you put in money, all of us also go through a very stringent process of validating. Yeah. And one of the key thing is your money, make sure that it's not put into a direct company name or what. It's all gone into a trustee name, a custodian name. Yeah, so if you see prestigious an account that sound funny, try to avoid that. Yeah, so I think that it's very very important to be totally aware of all these tricksters around here.
Is there any stories from out there? People who come to your platform, someone wrongly saying that they represent you. Any cautionary tales?
Yeah, I think as soon as we launched last year, immediately I think after a month or so, there've a few WhatsApp and Telegram scams, came out. So using our likeness, using our logo, using the Wahid name. And these again, these scammers, they usually target clients using the social media, and like Ronnie said, what they would do is instead of saying that your money should be deposited in a trustee or custodian account, it's actually directed to a personal account, or a company account, which is not, let's say for Wahid Invest, it should be Wahid Technologies, but you shouldn't even transfer it to Wahid Technologies anyways. It should go to the custodian account, right? So from then and even until now, we have seen a number of these scams popped up, and if you go to the SE's investor alert website, you can see some of the firms there that has used our likeness. So there is one called Wahid Trading.
Really?
Yes, and there's
Goodness.
also another
Okay, I didn't know
company
that.
named differently, but again, if you go to the remarks section of the investor alert, it says that they misuse the likenesses of Wahid Invest and so on, which is a regulated DIM. So for us, if there's nothing that we can do as a company, because it affects our name, but it doesn't affect us commercially. But it does affect individuals out there. So only they can then take action to go do police report and so on. So what we can do on our end, of course, is to increase investor awareness, like this session here, to always remind people that DIM is a regulated activity within SE scope. You can go to the public register to check. For Wahid Invest is Wahid Technologies, whether we have the license. For Stashaway is Stashaway, and for MyTeo is GAX MD. And these are all the due diligence that the clients can do themselves to ensure that they are dealing with the correct entity, the regulated entity, that when using the services for DIMs in Malaysia, you only have to use the applications or the website, not to transfer money to another third party and so on. And yeah, so, again, this is the investor education that I hope will continue to be spread across the social media, so that a lot more people can know about it. And as his chairman mentioned yesterday, for the first 6 months alone this year, about 900 million ringgit was lost to scams. That is a lot.
900, how much?
914 million ringgit.
Wow.
That is the first 6 months of 2020, and that is a
Oh,
lot of money that
goodness.
should have been invested properly to increase the wealth of Malaysians. So yeah, so that is unfortunate to hear. But as I mentioned yesterday, they have set up an internal task force to combat this as well. So yeah, so on their end they're doing, and on our end we hope to always remind our existing clients and potential clients how to properly invest in our platforms.
If it sounds too good to be true, it's probably not true lah. And there are things that you can do to arm yourself, because you guys are educated and you know about investing. But also, I think the cynical thing is that the scammers do target people who are less exposed to this kind of investment education. So the way that they reach out sometimes is more and more sophisticated, and they will use different tactics to lure you in. So, for example, the first thing is uh, out of this world returns. Returns in a format which I've never understood. It's like you transfer 500, and within half an hour I can give you back 3,000. If you leave it with me for 1 hour, I can give you back 5,000. Like I don't know how this defies the laws of physics, but like people are attracted to these kind of money games. So don't think that those kind of things are true. Like if you look at that normal investment, it's like 10% a year, 20% a year. Those are kind of normal returns. This one kind of few minutes, few hours returns is ridiculous. So arm yourself with that information, share that with your friends. The one story I found is that one of it wasn't a client of ours, but it was someone who reached out to us to double confirm and think that's a wise thing to do. He said, I got a message from you guys through WhatsApp, and this is their profile picture and this is their number. And it was a picture of a person with a Stashaway logo on top, and it said agent of Stashaway. So it's very funny because we are digital players and we only use web and apps. But then here you go, you have a physical person out there trying to sell our products, La Bononia. So we obviously told the guy that, this is not our agent. We don't have any agents, and please refrain from giving any personal information or sending any money. And for the ones who were unfortunately burned, and then they reach out to us to get it back, because obviously the scammer list up already, right? It's not there anymore. They reach out to us and say, hey, can I withdraw my money? I was promised some profit. We don't know, we don't have an account with us, so we get information about the scammers and we get the bank account details, and we can send it to the SC, or we can send it to the bank for them to investigate and shut it down. So there are things, small things that we can do, but in the end, it's in your hands. Be educated, be wary, and follow the advice that we've shared here today. So gentlemen, it's 1:40. I think that gives us a very good time to look at some of the questions. The questions that you guys have put on Slido, we will try and address some of them. Some of them are worth asking. Some of them maybe needs more explanation lah. I think the first one is more of a joke. I think let's start it off in a light way. So Mr. Kong asks, why use a term like digital investment manager with the acronym DIM? Not very bright for futuristic product. So I think this is quite funny, but digital investment manager is just something that we're stuck with because the SC gave us that acronym. But ultimately, you can call us robo-advisor if you want, or digital fund manager if you want, as long as you know what we do and the value proposition for your life. I think that's fine. You guys, any remarks on DIM? Maybe it's more romantic, lah. I think the lighting is down or whatever, but I don't know.
Maybe I would like to take that question in a different perspective. Yeah, whether it's DIM or robo-advisor. I think the key thing that we need to on the investor and the potential investor, that is indeed not just a black box. The DIM operations is not just just a black box that does things automatically without any human in that. Yeah. So our DIM operations is actually, as I explained earlier, is driven by a very highly systematic kind of algorithm. But on top of that, there are still fund managers and portfolio managers monitoring it closely. Yeah, and all of us are do have an investment committee that constantly monitor it on the monthly basis. Yeah, and very often I face this question saying that it's a machine versus a human. Yeah, and we do obviously well, Michael and same the rest for the rest. That's a lot of back testing results. Yeah, and one of the fundamental questions that people will be of concern is a robo advisor that say that, well, you are passive management and you base on past statistics data and based on algorithm or situation, parameters, factors, market environment of the past. Yeah. And but let me assure, well, at least for our side, okay, we do look a lot on back tested data. But moving ahead, and as we use the data, okay, as I say that there's a team of portfolio people, manager, and investment committee people. We do look at what were those assumptions, what were those criteria that were used by the algorithm for this past analysis. Are these criteria are they still valid in the current environment? Okay, are there any fundamental market changes that have changed the basis of the algorithm? Okay, so we do look at all this in totality. So if situation change, if market conditions change, not the blips and the noises, but fundamental changes, yeah, or technology changes, that change the new way of very the things that make a very major fundamental change, we would adjust the algorithm accordingly. Yeah, so it's not really a black box that is thinking behind the scene. Yeah, so it's really a combination of back-tested data because we need a lot of. It's difficult to project future. Actually, it's very difficult to use a crystal ball and say that what would things happen. But future, so long it's backed up with very fundamental data, both historical and moving forward data, and combine it into a very sensible investment decision. And that's how a DIM like MyTO works. We really try to combine it. And because it is digital, we're able to act on it very fast. Yeah. So I think that so I think that I'm trying to relate that question of the DIM robo advisor name and whatnot. Yeah.
Yeah, well done. I think that's important. Guys, so I think there's a lot of questions we can go through it over the next 10 minutes. Can you look at the Slido screen and read the next question? Because I've lost that view. I can only see the participants who have asked questions.
I've lost the question too. Now this quiz, I don't know.
Okay. So I remember some questions from my first glance. So one of the attendees asked, why am I getting different returns even though I invested in different robo-advisors at the same risk index or the same risk level? Any of you have any thoughts on that?
Okay, I think I can take it. So I think the easiest way to explain it is even though all of robo-advisors have their own risk index, investors still have to remember that the underlying funds or underlying securities invested are still different because each of the DIMs, the methodology, and so on, as explained by Ronnie just now, having gone through each owns investment committee, and all of us operates using a different universe of funds or universe of securities. So that can explain the reason why your performance in one robo-advisor or one DIM platform is different from another. And again, another possible difference is because one is not investing in all or two or more different DIMs at the same time, right? So you might have opened an account with Wahid, for example, earlier in the year, and then invest then, and then you open it with Stashaway a bit later or a bit earlier and invest then. So, it's not an apples to apples comparison as well. So those two, I would think, would be the most possible explanations for why the differences are there. But mainly it's because of the underlying securities that are not the same.
Correct. And also some of, I think with Wahid's investment products, it is predominantly RM based,
Correct.
except for one which is US based, right?
Yeah.
So for Mintio and StashAway, both of us focus on more global investments, so there will be an element of FX risk as well. So there could be investment gains or losses that you could see versus a domestic product which is ringgit based naturally. And all of us have different risk levels, and the only true way to compare apples to apples is to really look at the risk that we actually take, whatever measurement you want to take, and see whether from a risk adjusted basis whether the returns are more or less the same, right? So that's not easy to do. So don't think that necessarily one on the most risky on Mintio is equivalent to the most risky in StashAway and Wahid. So do your homework, dive into the portfolios. It's incumbent upon you to know what your portfolio is made out of. And to relate it to the first question about being dim and maybe being in a black box, I think we are very transparent because we show you what exactly we invest in, what ETFs we invest in, right? So speaking of which, another question that I glanced earlier is, why do robo-advisors like to use ETFs? Is it mandated by the SC? Ronnie, you got a response to that?
Yeah. First of all, there's not a mandate by SC. The ETFs are, just to answer that, so it is not a mandate for robo-advisor to use ETFs. And why most of us use ETFs for a very simple reason. First of all, we try to mirror. It's just like a unit trust. Yeah, it's just like buying a pool of, instead of an individual stock, we invest in a pool of companies. Yeah, and ETFs they're listed in the stock exchange, so the liquidity, the access, and certainly the fees are much cheaper and give you a very good exposure. For example, I think there was some question about diversification too regarding this one. The other thing, so for example, like the diversification, but in Mintio case, we use ETFs to do a lot of diversification in terms of various asset classes and various multiple countries. Yeah. So in Tio, by putting in 1,000 ringgit, for example, the only way you can have a very good diversification and very good broad asset classes. Okay, like for example, in Mintio, by putting 1,000 ringgit, just an example, you are technically investing over 86 countries and over variable 10,000 world companies and over variable asset classes, whether it's equity, growth bonds, income, or commodities, gold, treasury bills, and ETFs is a very, very efficient way of trying to own a pool of assets at a very low expense ratio or a very low fee. Yeah, so I think that's the biggest advantage. And in fact, if I'm not mistaken, last year there was a report being published for the first time in US. The investment in ETF and in the passive management has over exceeded the investment in the sort of active management. So there are a lot of goodness in investing in ETFs. Yeah? Perhaps Ken, you can add.
Yeah, I think ETFs are a fundamental piece of technology that has enabled robo-advisors to thrive. We are trying to look for the lowest cost investment products to put together to bring to you. So, when we talked about unit trust earlier, the way it is managed is usually active, and because of that, it usually comes with more fees. If you forget the 5% sales charge, there'll be a 2% or 1.5% management fee, whereas a very, very expensive ETF could be maybe 50 basis points or 70 basis points. That's the most expensive that you can get. The cheapest is like 3 basis points. If you look at a S&P 500 ETF out there by one of the big boys, BlackRock or State Street, is very, very cheap. So that is the reason why we like ETFs, is the cost. And don't think that this is something that we're bringing to you, the retail public, and it's something that is not sophisticated. Yeah, I think this is something that a lot of institutional, sophisticated fund managers are also choosing to use ETFs to invest, because ultimately it's about the net return you get at the end of the day. So if you look at the California pension system, which is like our version of the EPF, they also start using passive products and ETFs because they want to reduce fees. So don't think that it's like, oh, because it is in the retail public means it's not sophisticated. It is actually sophisticated if used in the right way. Yeah. So ETFs, I think, are a very, very good way of getting exposure. It is 150. At 155, we will remind you of the quiz. So we have another 5 minutes for Q&A. Let me look at the slide. It is the questions are back. So Aizat asked, hi, my question is it wise to invest in more than one robo-advisor at the same time? I'm thinking of diversifying my portfolio. So I think, as very diplomatic people, all three of us, I think you can try all three of us. And what I will say is that people appreciate different things about different platforms. You know, if you really boil it down to it, it's really like, do I like the platform because it gives me good returns? But that is just my view. Other people care about the interface. Other people care about education. Other people care about it being Sharia or not, the actual exposure being foreign or not. So I think you have to do your research, make up your own judgment call, and ultimately see which one works for you. Is that anything you want to add?
Yeah, I think that's a good point. Different people have different what you call it, needs, right? As you mentioned, some people may want exposure to only Sharia products. Some people can, are able to invest in conventional and of course Sharia or ethical products. So like Ken mentioned earlier, do your research. Each of the DIM platforms have their own strength, and of course their weaknesses as well. You can, the best way, as they mentioned, is again to try all of us, not just a few of us. There's a few more out there. Some have different business models than others. You have a spare change model as well. So if that suits your particular saving styles best, then maybe that's the best for you. But all of us are here for the same purpose, which is to again democratize, investment, bringing down the cost and also the minimum investment so that it's more affordable. And with that, that is something that you can't really find in other products. For you to try, for example, 3 or 5 different unit trust funds probably require you minimum capital of about 5,000. So with us, it's probably like, at most it's 500 or 300 if you want to try 3 and so on. So, everything is at the palm of your hands. And, just try and see which one is best, which user interface you like best. Possibly that's important to you, or what kind of client support that you like best, or, or additional infos like, market commentary and so on, which I think all of us provide as well. So everything is accessible from, as easy as going to your smartphone and downloading the app. And even before downloading the app, you can just go to our websites and read from there as well.
Brilliant. Sorry, Rani, you want to go ahead?
Sorry. Yeah, I think to just add one final point to that, as I Ken and Izzat mentioned, really please do your homework, and we are very transparent in the app, all your investment, your returns on each ETFs. For example, we have 32 ETFs. How does each ETFs perform? Okay, and your how much do we charge you in terms of our management fees? We show that in our app. Okay, and are you making money due to fund performance or due to exchange? We also show that all very transparent. Yeah, so I think that's very important for each individual do your homework and see which one suit your sort of your risk appetite and so on and so forth. Yeah, but all of us have a common objective, really helping each and all our rakyat here, okay, to invest sensibly, long term, taking a longer perspective view, and not to judge on a short term basis. Yeah.
It is 1:56, and we have 4 more minutes to wrap up the session. And I want to give you guys all a reminder that there's a pop quiz going on. There are 5 very simple questions about the DIMs, and yeah, go ahead, because the fastest person to answer that gets a very good cash voucher from the SC. So with a few more minutes to go, let's maybe wrap up, gentlemen. Maybe some parting words of advice for our listeners out there.
I can start first. I think
Okay.
let's go back to the theme of this virtual investment, which is silap lebo, duit lebo, right? So at the end of the day, there are a lot of investment options for you, including DIM or robo-advisor. But each and every one of us has to be, educated to make sure that we are investing in the right company or in the right platform, and all of this has a way for you to do so. Again, just to remind everybody, for DIM, you can go to SA's public register, check if it's a registered entity, and please don't fall to the firm clone scams or other Macau scams and so on. Uh, uh, the capital market regulator here is SC, so everything under the capital market sun is under the purview of SC. Please do consult them if you have doubts and uncertainties as well. And with again, with the advancements of technologies and so on, rising fintech solutions, we hope that you do try at least one of the DIM solutions here, and we hope to see this space grow and become just your typical investment solution in the future.
Great. I think I'll go next because I started the conversation today, and I'd like Ronnie to give his final word. So I think my word of advice is, during this COVID period, people think that you should invest differently, but it's not the truth. The truth is there are always best practices, and the best practice is basically to invest regularly and invest for the long term. Because if you try going in and out, you're trying to time the market, it's going to be very difficult for you. And because of that, DIMs or robo-advisors like us are a very good platform to actually make regular investments and invest for the long term. With all the advantages that we talked about, I think it's a very compelling thing for you to build your wealth. And I wish you all the best in terms of your investing future. Ronnie, you want to close this up?
Yeah, I think that my fellow peers have really summarized very well. And the parting shot is take a long-term perspective investment. Do not procrastinate. Okay, and start small. There is never ever a better time too soon or too late to invest. Cultivate that investment habit. Okay, do not time the market, but spend more time in the market, not to time the market. Yeah. So I think with this, I wish everybody well. Please take care, stay well, and stay safe, and happy investment.
Okay, guys, let's take a very quick screenshot. So let's do. Okay, good thumbs up. Thank you, SE. Thanks, guys. Okay, I'll send this to you later. Okay, bye.
Bye.
Thank you, everyone.
Thank you.
Thanks, you guys.